Dear traders, ladies and gentlemen, welcome to our daily webinar series, Real-Time Trading Ideas. Today is Tuesday, the 14th of November. And of course, as we are doing every day in this short webinar, we want to show you hopefully nice trading ideas, screen the markets with you, and of course also answer your questions live in the webinar. For some of you, it might be a new voice that you are hearing today. I'm taking over for Mr. Jens Schanowski, who is on a business trip, and that's why on this week you will be hearing my voice. I'm also from the German office, as you can probably hear, but I hope that's fine with you. First, have a look at our risk disclaimer. Please be aware that you are trading leveraged products with Admiral Markets. Those leveraged products can result in losses that exceed your deposits. You should always test all your trading ideas in a demo account first before you go live. Please be also aware that we do not consult you on any trading decisions. All your trading decisions, you are responsible for them yourself. All right. I want to rush through it a little bit so that we have a lot of time for our daily trader. Today it is Paul Wallace. Every day we have another trader so that you can really see different trading styles, different trading ideas. Every day a new trader, professional trader for you that shows you how the markets work and hopefully shows you also nice trading ideas. If you are new to Admiral Markets, of course, we also want to show you that we are having a nice product, a nice offer for you. Of course, very nice conditions, especially in indices trading, also, of course, for Forex trading, and a nice trading platform. The MetaTrader itself is a very basic platform with not so lot features, but of course we are offering the Supreme Edition. It's free of cost for you, free of charge for MetaTrader 5 and MetaTrader 4, and you can test it if you want with a lot of nice trading tools, for example, for one-click order trading, order ladder risk calculation. There's a lot of tools included in your MetaTrader with Admiral Markets. If you have any questions after the webinar, you can contact your local sales team either on the website admiralmarkets.com and then on the global page, or you just go on your local country webpage and then contact your local customer support or contact the UK customer support. I hope every employee in this company is able to help you, and that's why you can contact the best person. All right, so now I don't want to hold it back any much longer. Paul, you can take over now. I will give you microphone and then the screen, and then we can start.
Good morning, everybody. Hello there from the UK this morning. I hope you can all hear my voice. Hope you can all see the screen. Thank you for the introduction. So, I said good morning, ladies and gentlemen. We've got an interesting day ahead of us. If you're keeping on top of your news, which I would hope good traders would be, namely what we have today is we have a little bit of a little tete-a-tete, a little conference from the central bankers we have, which I believe is happening in Frankfurt today. And so from about, well, in fact, I think it's starting now. We have the likes of Draghi and Yellen and Mr. Carney speaking. So undoubtedly their comments will shift markets as they come out and say something that either overwhelms or underwhelms the markets. I suspect most people who've traded a good while are normally rather underwhelmed by what central bankers have to say, but the truth of the matter is what they say matters and has an impact upon markets. So with that in mind, what I want to do is I want to actually talk about the sterling today, okay, sterling and FTSE. But beforehand, I just want to have a little update on DAX. I know how many of you are DAX traders and enjoy what has been a rather eventful and volatile few weeks, and might be said a few months on the DAX in terms of opportunity. So last week when we spoke, I talked about effectively sort of selling up here around about the what was that, about 13,470, and I talked about price coming down to sort of fill the gap, and we had a trade that way. And invariably, as you can see, as I'm sure many of you have, we've had a rather fantastic move down in the DAX over the pretty much over the last week or so. It's been super opportunity for those of you who are, let's say, contra traders or mean reversion traders. And just a couple of little points I want to point out, I appreciate that we have a rather wide spread of experience in the room in terms of people who are completely new to trading, people who are experienced traders. So just for the new traders here, just on my charts, the very simple charts, I have just bullish candles for green, bearish candles for red. I have the blue 20 simple period moving average, the red 50 period moving average, and the green 200 period moving average. And there are a few blue dotted lines which you'll see in for where I've drawn in sort of horizontal levels of support and resistance. Just keeping it very simple. But just a little kind of a little bit of insight into for the completely new traders is very often what we'll see is, I talked about, I didn't really particularly want to call tops of markets. I was expecting just a sort of a retrace down to fill the gap, which it did and continued. Just the sort of the teaching point or the little bit of insight is that very often what I find is if price will break the 50 period moving average with a strong move, it's not unusual then to see that sort of trail its way down to the 200 period moving average, and that's what we saw there. And that was a little bit, that even surprised myself, because as you can see, the distance between them is rather broad. It's a rather wide range. But invariably, what we can see, if you see a strong break of that 50 period moving average, it's not unusual to see price drift its way down to the 200. The 200 is a real bellwether within markets, okay, and lots of people use it across lots of different time frames for all sorts of different trading ideas. So now we are where we are. What am I looking at? Well, what I'm looking at, and this is for let's say for the longer term traders out here, ladies and gentlemen, is I'm kind of looking at, daily wise, we had a big key day reversal there. Okay, that Wednesday we turned into a key day reversal, which on a week basis turned into a big bearish engulfing candle, right? Big bearish engulfing candle. But for most traders, sort of selling the bottom of that and a stop above that, the range on it would be huge. Okay, would be too big for most private traders. So what I start to look at is, well, where would be a natural range for a price to pull back to give me an opportunity to take a trade downwards if that's the way the market will do. So what I'm now looking at is, okay, I'm looking at a little bit of a range here, okay, between what have I written down here, between about 13,260 and 13,320, and what I'm hoping to see, is maybe price rally its way up into there, and then if I get price action moves, okay, then I'll be looking to sort of trade it back down to around about the 12,900 level. We can see it's been a pretty significant level of support there. So trade gets up there. Ideally, what I want to do is, just sort of sell into that. Have about a 60 tick sort of stop loss, and with a target of 12,900, that gives me about a 360 pips of or ticks of profit. So that gives me about a 6-to-1 possibility on a trade. So that's worth it to me. Okay, that's worth it. Now, normally what I'd also have been liking to do is to maybe look at sort of seeing if a kind of a shorter term short in the DAX. The two things that are stopping me, one is that we are just in front of that 4-hour 200 there, okay, and secondly, Draghi speaking this morning, okay, so there will be that will have an impact. There will be some volatility and fluttering about, so I'm kind of holding steady on that, but I'll be keeping an eye on that, okay, keeping an eye on that and see is there an opportunity for would a chance for it to basically come down, double bottom before it flies back up back into this range, and then look to sell down. We know price never moves in a straight line. All right, you can see it yourself here. Price zigzags constantly, and that's what we're looking at. So that's just a little update on the DAX. But what I want to talk about is British pound and give you a little bit of insight. We have Mr. Carney speaking today. So Mr. Carney's a rather how could we describe him? He's a bit of a Marmite character in the UK. I appreciate it for our European viewers. They may not understand Marmite's a bit of a vegetable extract you put on toast, and the whole marketing behind Marmite is you either love it or you hate it. And that's very much like Mr. Carney, is that some people love him, a lot of people hate him, and one of his challenges is that he has a bit of a problem with credibility. So he's when he speaks, he doesn't hold the same sort of the fervor that Yellen or Draghi would at the moment. But anyway, that's another story for another day. So here we are. Here's what I want to talk about: is give you a little shot at looking at sterling, okay, sterling and FTSE. Now, those of you who know me know primarily I'm a big picture trader. Okay, I like to trade off weekly charts. That gives us a bit of an insight. And what I want to do is just give you just a quick little look at something that I was looking at the weekend. So I do a good bit of my analysis at the weekend because I got to take an hour or so out. You know, markets are closed. There's no sort of markets moving fast, and I get a chance to have a little look and do my analysis in peace and quiet. What you can see here is I have a profile set up with sterling, okay, major sterling currencies. So I here have euro sterling, pound against dollar, pound against yen, pound against Swiss franc, pound against Aussie, pound against Kiwi, pound against CAD, and the FTSE. These are all on the weekly, and what I wanted to have a little look, or what was drawn to my eye, was that last week all of the weekly charts, okay, were showing rather small candles, and in fact some of them were either inside bars or spinning tops. You know, spinning tops, okay, or you know, even this was a little inside bar, pin bar. But also what we have is, you know, I've talked about it before, markets surge then rest, surge then rest, surge then rest. They are in a reflection of human beings. So when I see sterling, you know, just all across the board being very, very small candles, okay, that's the market having a little rest, and I'm waiting to see, okay, where's the market going to move? Where's the market going to move? Is there anything that can give me a bit of a hint? Well, interestingly, as last week, as basically sterling all had sort of small bars, you know, as I said, some spinning tops, some inside bars. What we had on the FTSE was quite the opposite. The FTSE actually gave us, and let's make it a little bit bigger for us, the FTSE actually gave us a big bearish engulfing candle. Up towards near the highs, we had a big bearish engulfing candle. If you remember rightly, I've just talked about that on the DAX as well. That's what we had. So we have sterling having small ranges, the FTSE having a big wide range. So that starts to get me interested. That starts to make me think, well, you know what, maybe there's an opportunity here. Okay, maybe there's a chance for me to sell the FTSE. So once again, a little bit like the DAX, you know, we are looking at a big range there on the FTSE for the weekly chart. What I'm just doing a quick bit of sums there. What's the low? 7420, high 7589. Okay, so you're looking there, what, about 170 points of risk. That might be a little bit too big. So what can we do? Well, a bit like the DAX, what we can see is there an opportunity for where we could actually sort of, you know, when the market retraces a bit, because they invariably normally do, is that then provide us an opportunity to get on board, and that's what we start to look at. Okay, and once again, I'm just having a little look at down into a range where I can start to give myself a bit of an opportunity to look at selling. What tends to happen is, you know, when you get a big engulfing candle like that on a weekly bar, everybody needs a little bit of time to get on board. All right, and so it's not unusual to see a market do a little bit of a retrace up back into a zone. Sometimes for the Fibonacci guys, it'll sometimes be around between about 50 to 62% retrace, and within that, then start to see if there's an opportunity to get on board. Think about it, the traders, the market traders, you know, they always want to buy at a cheaper price. They always want to sell at a higher price, and nobody wants to leave or miss out on the opportunity. So what I'm doing is I'm waiting and looking for up at that region around about 7,500 to 7,525, a little bit of a zone there. Will that provide me with an opportunity to sell with a, you know, and give me an opportunity to get on board what could be a longer term trend? On the shorter term time frames, what I've been looking at here is that, you know, the FTSE, what we've had is just, it's been in a nice move. This has been like the DAX. You can see that. That's the hourly chart. What we've had is just a nice move down there, okay? Just cycling its way down. Nice pullbacks, finished by good price action that give you an opportunity to sell on board. And if you wanted to be a little bit of a short-term, aggressive term trader, well, then let me just flick this up. There we go. Then actually what we're looking at is a case of, we've had a bit of CPI info this morning on the pound, and that provided a little bit of an aggressive trade opportunity to sell. You know, and that's why I was looking and putting a little order in there. Okay, at what was that? What did we sell there this morning? Up around about here. Okay, around about that sort of 74. 25 to 30 range, heading down to the sort of 75, just in front of the big round number, and that's what we're looking for as a let's say as a short-term aggressive trade. But the kind of the longer term swing traders, if you're trading around a job, you can see the 4-hour chart has just moved down nicely, and I'll be looking to see, will it actually pull back into this zone here, about 7,500, to take a longer term particular trade. So I hope that gives you a little bit of insight. If there's a few questions there, I'll happily talk about that. So I think Eric asks about the Dow. Well, why don't we have a little look at that, okay, and see what's going on. We've got a minute or two. I can talk about that. Let's see what we've got up here, okay. Let's find a Dow chart. Bring it up, okay. Let's just put on a very quick, simple template to do ball basic. Okay, so, well, you know, you look at the Dow there on the monthly chart. All right, what's it been doing? Well, it's just been on a tear, Eric, hasn't it? Absolute tear. There's if if you can't identify that as an uptrend, well then you probably need some extra training. But the reality is that's been on a strong trend. Okay, and I consider myself a bear. I'm a natural bear. That's my bias. I know that, but even I know don't step in front of a freight train, okay? And that's what we've had here, okay? For the last few months, for the last year, basically, since Trump got elected, that's what we've primarily seen. So what we've seen is, I look at it there, okay? We can see that, just take a note of what we've seen on the DAX and the FTSE. But what we have seen is maybe just, a little bit of taking a little bit of a rest, okay? Remember what we said: surge then rest. Surge then rest. That's what we're looking for in markets. So what I'm looking at there at the moment there, if I just try and move this out of the way, is I look at that us in a range there between about 23,300 and 23,600. I look at us taking a little bit of a rest there at the moment. On the DAX, we had a lovely head and shoulders pattern there. I personally don't see a head and shoulders pattern there on the Dow to give me an indication that we're going to drop. But what I would be looking at is, if we start getting beneath 12,300, well then, is it a case of, this is the 4-hour chart for the swing traders, if we get beneath that 12,300, well then, is it going to run down to that sort of, that 4-hour 200, which would be, what's that, around about to 23,150, okay, by the time that price moved on. So I'll be looking at, we've had a cross in the 20 against the 50 there, okay. I don't trade crossovers. I think that they tend to be a bit pointless because you get killed in the whipsaw. But what you do take a note is, well, at the moment, price is respecting that 4-hour 20, and it's just until I see a change in that, okay, until I see a move back above the 50, all right, I would just be saying this is a little bit of a range-bound block, and it's just going to sort of knock about there a little bit until we get some new data that will push us out. We've seen the European indices roll over, but we need to see a little bit more for me to be convinced that the Dow is going to roll over at this moment. So I hope that gives you a little bit of insight. I hope that helps you a little bit insight on the Dow. I'll finish that question. Dollar ruble. I can't do that today, Modris, but I'd be very happy to do it next week. I'll see if I can pull it up and talk about that for you next week. Defining the zone in pound against dollar. I'm not sure I fully understand that question, Jonas, but let's bring that up. Where have we got it? Just to finish for the last minute or so. Here we go. So I don't see, necessarily a zone in pound against dollar, but what I do see is, last week was, it was a bullish but inside bar, and the trend is still just about heading up, okay. We're still making higher highs, higher lows, okay. But what I'd be interested in is, sort of a break beneath that. The low of that's what was a bearish pin bar a couple of weeks ago, okay. There, that would be of relevance to myself, all right, okay. So break beneath that, what's that, 130.38? Well, then you're looking at 130, okay. You're looking at that big psychological number, all right, and seeing if there's a break there, and then if there's the break of there, I'd be looking for it to head down. First target towards that sort of the 50, around about 128, so 200 pip run. But at the moment, I look at that on the daily. We did have a day there. Yes, we've not had much not had much to put confidence into sterling, but you know, what we see is we're still the big picture on an on an uptrend, all right. But it's definitely, yeah, there's definitely a little bit of a squeeze there. We're going to wait to see it to break out of. Okay, so I think that sort of finishes us for today. I hope you found that useful. Okay, take a little bit of a look at those sterling pairs. You know, even if you're in a short intraday trade, okay, it only takes half an hour at a weekend to quickly go through the weekly charts and the monthly charts. Most of the time they'll see nothing, but now and then, like, you know, I saw to the weekend, you just see something that gives you a little bit of interest that, okay, sterling is coiling up, it's getting ready to make a move. And the question is, you know, are you going to be in a position to get on board of that? I wish you the very best of success with your own trading, and I look forward to speaking to you next week, ladies and gentlemen. Thanks very much.
Thank you very much, Paul. Dear traders, please be reminded to tomorrow you can enter the next webinar again at the same time, then with the next trader, and you will be, of course, welcome to join. Have a nice and successful trading day.